Ladies and gentlemen, good evening. This is Christopher Aaron. It is October 10th, 2018, here where I am, and I suppose by the time you watch this, it will be the 11th. On this channel, we analyze the precious metals and the related markets in the best way possible, which is through observable data and trends. And when the time is right, such as this, when we're in this type of holding pattern that we're in here in the metals, I also like to weave in a little bit of teaching on technical analysis, a little bit of education. So I wanted to change up the format this week, and I want to look at this topic, which is very much in the news these days in the precious metals. The gold COT Report, as it's called, Commitment of Traders. What is it? What does it mean? And is it bullish? And literally, you can't go a week these days without, if you just type into Google the gold COT Report, you will see hundreds of articles being written on this. You'll see videos if you type it into YouTube. And I'm sorry to say, but most of these articles and videos are flat out wrong about what they're saying. And I truly believe this is going to be a disservice if you don't understand exactly what is happening here with this COT Report. So that's what I want to get into. The gold COT Report. What is it? Let's just look at the basic definition first. We are talking about the commitment of traders. This report is published by the governing body of commodities trading here in the United States, which is called the CFTC, the Commodities Futures Trading Commission. Okay. According to the CFTC's website, the COT provides a breakdown of open interest for futures and options on futures markets. Bueller, what are we talking about here in plain English? And if you don't know where this is from Ferris Bueller's Day Off, great movie from the 80s, which I highly encourage you to watch from time to time because it's quite hilarious. So to put this into plain English, the COT Report breaks down traders in the gold market into these different categories. Several different categories. We have commercials, which are actual users of the commodity. So we're talking fabricators, we're talking about, mints, we're talking about mining companies that sell the metal, all the actual users and consumers of the commodity. Then we have another major category, which is speculators. And this is those who buy or sell the contracts in order to attempt to profit from a change in the price. And I would say, this word speculator gets a bad rap, a bad reputation sometimes. But I would just say, really think about this for a moment. Think about yourself. Why do you invest in gold and silver? Is it not to attempt to one day profit from a change in the price, either higher or lower, or from trading ETFs or mining stocks? So, this word speculator is not necessarily an evil word. This is just a group of participants who are looking to profit from a change in the price. And I would say most of us fit into this category. Some of us see this purely as a hedge against, absolute disaster. And I agree that's part of gold's role. But speculators, we can break speculators down into large and small. The large speculators are the hedge funds, the large trading desks, etc. This is the majority of this category. And then the small speculators would be typically individuals. So when I'm trading futures in my own account, I would be a small speculator according to this report. Now, who cares about this, right? What does this report matter at all? Well, this is the big deal. I will tell you, a lot of people care. Why? Because there's this consensus view. And once again, if you don't believe me on this, I encourage you to go stop the video and Google this for yourself. Google the gold COT Report. The consensus view that we will see about this goes like this. Because those commercial traders who are called the smart money, the actual users, and I put this in quotes for a reason, the actual users, because those commercial traders are net long gold futures, meaning they think the price is going to rise, so they are investing in the gold futures. And speculators in quotes, dumb money, are net short, meaning they think the price is going to fall, for the first time in decades. This situation has happened now for the first time in decades. We'll look at the chart in a moment. But because this is true, gold is therefore set to bottom and advance in a new bull market within the near future. This is the consensus view. Okay, because of this setup in the COT report. Some examples. You don't believe me? Let's look. And by the way, in case anyone who wrote these articles or videos is watching, this is not a personal attack against you or against anyone. I see, like I said, I see dozens of articles like this coming out every month. So I just did a quick search, and I'm showing a few samples of what I found in my own search to illustrate this point. Not a personal attack, but look at these. Spectacular Gold COT Report. Prepare for a huge 6 months, right? Written a little over 2 months ago. And what has gold done since then? It has fallen dramatically. Well, yeah, a huge 6 months, but in the opposite direction. Gold bull market, COT, sentiment, bullish, right? There's another one. Bullish gold and silver COT report from a couple months ago. And this one, the gold COT chart suggests the next move will trigger a mega breakout. Videos talking about a fund manager here talking about the commitment of traders report for gold, the most bullish ever. Really, 1 month ago. Let's look at that. You know, again and again and again. And I am going to call a spade a spade. There are times to say we don't know. There are times to say there's indecisiveness in the market because we have mixed signals. And there is time to call a spade and say this form of analysis, which is the consensus view, the vast majority of articles are talking about this, and they are wrong. Let us look at why. So what we're going to do is bring up the price of gold on the top. Here's the price of gold since 2001. And yes, I know this left part of the chart is covered up. That's for a reason, because I want to make a point. We have the price of gold here at the top from 2001, from the low at $250 an ounce up through 1900 and back down to where we are. This is a log scale. Price of gold on the top. And on the bottom, we have the commitment of traders report for the entire time with those three categories that you saw. Large specs, hedge funds, small specs, individual traders, and commercials, the actual users. And you can see according to the color coordination here, you can see, here's the zero line. You can see whether or not, for example, the large speculators, notice that they were below the zero line here in 2000, 2001, and then they started going above the zero line. So above the zero line is net long, below the zero line is net short. So what's all the hoopla about right now? It's the following. If you look at the last time that this red line, the commercials, was above the zero line, in other words, net long, the last time that the commercials were net long was right here in 2001. And look at how that corresponded with the bottom. Okay? And then they were net short for 16 years until when? Just now. And you could barely see it, but if you actually zoom this in, you can see that the green has crossed below the zero and the red has crossed above the zero right there. So first time in over a decade and a half that the commercials are net long and the speculators are net short. Same has happened right here. And so the theory is, once again, well, the speculators are dumb because they just chase the price around. And the last time we saw this signal, look at how it corresponded with the bottom in gold. 10-year, eightfold advance in the price. So isn't this bullish now that this happens? And I just said before the answer is no. Why is the answer no? Because I think that there is a lack of investigation going on by these articles, by some of these authors. They're not looking at the full history that we have available to us for the COT report. They're using only the sample set of the beginning of a bull market. And the idea here is that what happens in a bull market is very different than what happens in a bear market or a sideways moving market. Let's get rid of this black shaded area and check out the full history, not cherry picking. This is the full history that we have available in published data. Let's look at something else. Go way back, not 2001, look at 1994. If we actually look at 1994, we can see right down here where my mouse is, this was the first time that we have available on record keeping that the large specs were net short. And shortly after that, right here, we can see this little red line at the end of 1994. This is when the commercials went net long. Okay? It was not here. This was not the first time in 2001. It was in 1994, and it probably was before that, but this is the total data set that we have available to us. Okay, so this signal is the same as this signal. And this is the signal that we are seeing again now, that everyone is believing is super bullish for the price of gold. Look what happened the first time we saw this signal. Gold continued to decline for 5.5 further years. 1994 through late 1999, falling by 37% from this level. And it's not like this was a peak level. This was $400 gold, and it fell down to $250. 37% over the next 5.5 years. So this signal does not always correspond with an important bottom in the gold price as everyone is claiming that it does. We can see multiple times where this signal showed up and was nowhere near the bottom for gold. Now, it's interesting to note, if you think about this too, as far as this discussion of who is the smart money and who is the dumb money between speculators and commercials, look at this. If speculators are dumb money, why were they correct and net long, we can see that here, for 9 straight years during gold's bull market? Why were they on the right side of this trade? Remember, if you're net long, you think the price is going to rise. So speculators were net long this entire time as gold rose from 250 up to 1900, not the commercials. Yet somehow, all these articles and all these videos like to cherry pick the one time here that the commercials were net long and say, oh, because they were net long at the bottom, therefore they got this whole move right. No, they didn't. They were wrong the entire time if you want to use those terms. Takeaway here is that speculators are not dumb money. Speculators are in the business of predicting prices. They had better not be wrong for 9 years in a row, because if they were, they would no longer be in this business. Okay, that's the definition of a speculator. Whereas the commercials, the miners who dig the gold up out of the ground, when is the last time you saw a gold miner producing a 1,000-ounce Doré gold bar and then saying, no, we're not going to sell that because we think the price is going to go higher? Or when is the time you had an electronics manufacturer or any sort of commercial user, a dentist who uses gold? When is the last time you've had them speculate on the price and say, you know what, I need gold for fillings, or we need gold to create wires or shielding for electronics, but I'm not going to buy it now? They don't do that. They need the product. Okay, so this idea that speculators are dumb money and commercials are smart money is completely wrong, completely fabricated. The evidence does not support it. Coming back to the present, we're right here. Okay, this no longer looks so bullish if you consider that the first time we saw this signal was here in 1994. This actually looks very similar to the signal from 1994, the first time that we saw this crossover in many years. And if this is true, 2018, that the commercials are net long again and speculators are net short, then this is a repeat of the cycle that we saw here. And we must be prepared. We must interpret this knowing that speculators can indeed be smart money for years. Okay, for years as gold declines. I'm not saying that gold is going to decline for years. Furthermore, please don't shoot the messenger. But what I am saying is that the data shows that because the speculators are net short, this does not mean that the price of gold is going to skyrocket. That is what the evidence shows. So once again, does this signal mean that the precious metals have to fall? No, absolutely it does not. But I think it's really important to understand that it does not mean that the precious metals have to rise, which is what's being portrayed by all these other sources. So I wanted to set the record straight and show you the evidence for yourself. And I truly think that this is such an important time to learn for yourself. If you see this process as an investment in yourself, in your own education, your knowledge, if you see this as something that you want to be doing, following the markets, being an investor, being a speculator, being a stacker, but a knowledgeable stacker, if this is something that you want to be doing, this is the time to really get a system down that works for you. And not just seeing it as a one-time thing that we have to be right this moment or else the whole thing is under the bridge. An investment in knowledge pays the best interest, said Ben Franklin. And I agree. So that's why I'm here. That's why I'm making these videos. I just wanted to announce really quickly, I had a few people ask me if they could donate to this channel. And it was not something that I was thinking about, but a few people asked. And so I did set up this Patreon account. I'm not asking for this. I just wanted to let you know, and I won't even be mentioning this in future videos, but I'll leave the link up there. If you do want to give $1 or $2, it is most appreciated if you find value in these types of videos, in this process of education. I definitely appreciate it. I know there's been times in the past where I have felt compelled. There have been some podcasts that I derived a great benefit from when I got back from Afghanistan, and I was going through a really challenging time period because they offered me insight and they offered me knowledge that I didn't have before. And I actually went out of my way to donate some money to some of these podcasts. So anyway, you can find the link for that below if you would like to see that. The premium service that I do offer covers the latest developments in gold, silver, and the mining sector from this technical kind of basis. You get flash updates right to your inbox when something is happening that you should know about, as well as members-only videos like this, but much longer and much more in-depth. If you would like to speak to me, Christopher Aaron, one-on-one, please know that you can do so by the consultations tab on my website. If you have a question or if you have a situation that you would like an independent perspective on from someone who does not sell the precious metals but likes to rely on observable data and trends and logical systems for developing ways to move forward. Thank you very much for watching this video. While we're in this grind, I'll do some more of these education type videos when there's an opportunity to do so, and I will see you this time next week.